So our process is grounded in active growth investing for the long term. What that means is that we're focused on identifying the most compelling growth opportunities in equities and then holding these alongside a best ideas global bond portfolio and cash. Now, typically, the Baillie Gifford managed fund is going to have 75% in equities. The reason for that is that is the asset class that's really going to drive returns over the long term. But we believe it's important to have a meaningful allocation, typically 25%, to the diversifiers of bonds and cash. Now, the peer group has a range of 40 to 85% in equities, so we are very much at the higher end of that range. On top of that, this is a very actively managed portfolio, so on a stock by stock, on a bond by bond basis, the fund will look very different. But to our mind, that's really important because you have to be different in order to deliver meaningful outperformance over the long term that's differentiated versus peers. So idea generation is wide-ranging, it's varied, it reflects the fact that all investors at Baillie Gifford are first and foremost analysts. So the majority of their time is spent on the generation of ideas, on the research of companies that we believe can offer superior long-term profit growth. And perhaps just using a few new buys to bring this to life, the first of which is CRISPR Therapeutics. This is a Swiss-American biotech company that's looking to develop genetic medicines to treat a wide range of diseases such as cancer. And this idea actually came from one of our graduate analysts who's very interested in gene editing companies. On the other hand, we've recently purchased Sweetgreen. This is a company based in the US that sells salads as part of a fast food model. And it's a business that we first came across in 2016. That was when it was still private. And actually, one of the managers had come across it whilst researching another business. In terms of the typical holding period for the fund, it's about 5 years. So that's in line with our investment objective. But we've got holdings in the fund which have been in there for much longer than that. Atlas Copco, for instance, the industrial equipment manufacturer, has been held since 1999. It's been a really difficult 12-month period. The fund has significantly underperformed the peer group. We've seen an environment where significant volatility has resulted in an environment where fast-growing companies in particular have been hard hit in share price terms, as unsurprisingly, given the prevailing market backdrop, investors are favouring short-term certainty over long-term opportunity. Now, as always, there are some issues at underlying companies. We recently saw Peloton from the portfolio, for instance. But on the whole, we're very happy with the shape of the funds, of the resilience of the holdings within that. We've been seeing some excellent results come through from companies like the Trade Desk, which has outperformed materially in a very tough advertising market. And importantly, above and beyond that, we're continuing to find new ideas to leave the fund well placed for the next 5 to 10 years and beyond. Over those longer term time periods, I appreciate that it won't be much consolation to newer investors, but over 3 and 5 years, performance does remain ahead of the peer group to the end of September. We've been running the Baillie Gifford Managed Fund for over 35 years now, and that track record shows that it can both outperform and underperform rising and falling markets over short periods of time. Our style is unlikely to do well when slower, steadier growth is in favour or the market ignores growth companies favouring value businesses. Conversely, we expect that the fund will typically perform well when the market rewards earnings growth. And that's really important because when we look at what drives global equities to be among the top performers over 5 years plus, it really is the ability of companies to grow earnings. And that's why our focus is on growing companies that have the opportunity to make a real difference to client returns. So the fund's overall cost, its ongoing charge, is 0.42%. And that breaks down as an annual management charge of 0.4% and ongoing costs of 0.02%. They represent things like audit costs, legal fees. Brought together with the fund's long-term track record, we believe that this represents a good value proposition. Costs are the one part of the equation that you can control, so it's important to keep them reasonable. It's also important because it actually means that clients keep more of the outperformance generated over those long-term time periods.